So I'm delighted this afternoon to be with the Daryl and Aaron. Look, I'll let themselves introduce themselves in a bit more detail. Aaron's going to be asking the questions. I keep thinking it's a physical meet. It's the first time I've done a evening networking event which isn't physical. It's online, but I'm really delighted to have the panel. Daryl, Rod Turner's confirmed in the last few days as well. David Lawrenson, who has been in property since the 1980s, so long time. One of the, he's been featured in the Financial Times, Guardian, I think Estates Gazette, Property Week, any publication you can think of, he's been featured. And also Julie Wetherall, who's got a strategy which I think is gaining in popularity. It's focused on care homes because people are thinking what recession-proof strategies are going to be working in this market. I have to admit, when Aaron said the R word to me about 10 days ago, I said, no, it's not. The R word is recession. I don't know what the D word is. We had Brexit. Now we've got coronavirus. As Sam Norris said to me from Bond Finance, who's going to be there as well, virtually on Thursday, the 26th of March. What is a D word? But let's get the virus for the vaccine, I should say, for coronavirus. That's the key thing. Look, Daryl, LendWell, relationship manager. I'm not sure it's a relationship manager or relationship director, but the key thing is you've got a vast knowledge. You came from university, graduate, Barclays, 2014 moved into Shawbrook, and product orientation. I don't know if that's the right word. Have I made that slightly up?
Yeah, you've made that up, but that's all good. So I did the product design at Shawbrook the last couple of years. So it's just things like what markets we're in, credit criteria, pricing, and all that kind of stuff.
So from my understanding, Shawbrook is a larger organization than LendWell at the moment. So LendWell, I don't know if you use the word boutique.
So yeah, we could use the word boutique. We're small. There's only 7 of us, so it's a completely different animal to a big bank like Shawbrook. But what it does allow us to do is get quite involved in the deals and quite involved with the clients that we work with. So the idea for us is kind of just a really personal, tailor-made service, and use the kind of mutual understanding between us and the client to be as flexible as possible, and facilitate deals.
So when you say small, the key thing for people to note is maybe small in terms of employee size, but vast in terms of knowledge, particularly when you got not just yourself, and not everyone I've met from LendWell. Stephen Johnson I have. Aaron's done an in-detailed interview. Karen Bennett had a significant role in Shawbrook, and there's one other name you've mentioned to me who I've not personally met who did also come from Shawbrook as well.
Yeah.
Aaron, you mentioned the R word, and I dismissed it wrongly. I admit. You did. I was going to say predict the coronavirus. You didn't actually predict it, but you understood early on in January the impact it was going to have. And again, I dismissed that. So, but to be fair, I'm in good company. Other people have dismissed the impact as well. I won't ask you where you think we are, Aaron, in terms of the coronavirus. That's the wrong question. But the right question to ask you is, recession-proof your property business. You came up with that title. What do you think the panel can offer that particular evening?
Okay, so thanks for having me on, Brendan. It's always a pleasure to see you, Daryl. So I just want to start from the start. I'll just give you a brief overview as to why I said that we needed to do a recession-proof panel. It was early on when you actually look at what was happening as far back as January, and what that was going to be doing in terms of the supply side and the knock-on that will have with the demand. And then you start to see the lag. Now, there are a few things that have come together in terms of a perfect storm. We have the price war with Saudi Arabia and Russia, which is all brought about by the whole thing around the coronavirus. Now, let's try and separate this. This is a property event on the 26th of March. So we're not medical experts. But having said that, you'd have heard the popular saying that property is a people business. So the way people are reacting to a shock to the system is something that, even though this particular incident is unique, there is precedent, and there is precedent. Now, the reason why I thought the panel would be a good place to convene is we have Daryl, because a lot of people will be speaking about, okay, what happens to their deals that are currently going on, what happens to their rates, what happens to their lending, what happens to the availability of funding, what happens to to LTVs. You know, people have some really, really deep memories of the last time we fell into the recession. And then we start to go into, when you start to look at your commercial basis, what happens to rents, what happens to footfall, what happens to occupancy rates. There are a whole load of different things, and you need people who have lived through cycles and can understand the current data and start to look back at actually what's happened in the market. You know, how long has it taken back for China to bounce back to capacity, et cetera, et cetera. But when it comes down to property, which is what we're all about, we need people in different asset classes investing in different things to be able to take their view as to how they bomb-proof their business. Now, understand that a lot of people here have started to do this process because we were already looking at the cusp of the effects of a no-deal Brexit, which I think, you know, controversially, I'm losing friends as we speak, having to mention Corona and Brexit in the same conversation, which I think might have had a similar effect if we'd had it then, in terms of how, obviously not a global shock, but in terms of how the data versus the behavior don't quite match up as much. And then, you know, then the behavior drives the data and so on and so forth. So what I really want to start by saying to Daryl is, Daryl, and you were here around the last recession. If you were to start with how property investors, how to position themselves, particularly in regards to how that will affect their lending and their credit lines, what would be the first thing that you'd like to say?
Yeah, so I think the banks are in a much better position than they were last time around. So, you know, people will remember some of the experiences of some of the high street banks and quite aggressive kind of repossessions and defaults, particularly on development schemes where they were kind of mid-build. And that was because GDVs were kind of falling through the floor. So the clients were kind of breaching their agreements and their covenants with lenders. But a lot of that behaviour wasn't really driven by what I would call common sense. So as a lender, the common sense position is whatever's going on in the rest of the world is to a large extent outside of a property investor's control. So really it's about working together to come to a plan as to how does everyone get out of this? How does everyone get repaid? What was driving behaviour last time around was literally a need for cash. So the big banks needed cash in order to keep the doors open and keep the lights on, because there just wasn't the capital in those businesses to trade ultimately. So it's a cash problem, not just a problem with values dropping. That, I mean, I might be wrong, but that shouldn't happen this time because there's quite a lot of capital amongst all the kind of lenders. So I think, you know, if you're in a mortgage and you've got plenty of time left on your mortgage term, in a lot of ways, there's nothing to worry about apart from focusing on making sure you can get your rent paid. And that, you know, that's kind of the key thing. If you're looking to do a deal right now, I think we're going to see some ability to fund a deal, but at kind of lower levels of leverage than you could previously get. So, you know, historically, 75% has always kind of been what's available on purchase price. I'd expect the market to kind of want to come down to 70, 65 in the short term.
You don't see it going down. You don't see it going below 65, Daryl.
I don't think so. No, I don't think so. Not for what I would call day-to-day assets, so kind of houses, straightforward commercial properties, and mixed-use properties, that kind of stuff. I don't think so. But I do think the market's going to price in some caution because it's not sure where values are going to go in the short term. But I think the other thing that underpins all of the activity is there is still a long-term belief in the UK property market. So a lot of the reactions we'll see in the next couple of months are really about hedging bets because they don't know what's going to happen in the next 3, 6, 9 months' time. But there's still a lot of long-term commitment out there to the UK property market because the fundamentals won't change through this crisis. Ultimately, people still need homes to live in. Businesses might struggle in the short term, but long term, businesses still are needed for our economy to function. And so therefore the property market will come back. It always comes back. So in the short term, it's just around identifying what the risks are in your own portfolio and figuring out how you can make it work on a cash basis. Cash is really going to be king for the next few months.
So to say that event is on the 26th of this month, 26th of March. Aaron, any final words?
I think, thank you for that, Daryl. I think Daryl covered it comprehensively. And for that respect, I think the other question that's out there is in terms of what exactly the government's packages are going to look like, especially in regard to what they're going to be doing with private renters, and especially when they're speaking to the banks and the mortgage companies. Is that going to actually affect, is that only for residential mortgages? Is it going to affect semi-commercial? Is it, I mean, what information do you have as to who can expect what for the people who are worried?
Yeah, so I think the government seems to have taken an approach of propping up underlying demand as opposed to propping up mortgages. So what I mean by that, and I actually think that's the right approach, it's just about execution now. So if you own your own home and you're not being paid at the moment, or you're not in work at the moment, there's the possibility to get a 3-month mortgage payment holiday from pretty much all the main mortgage lenders and all the main banks. It's on the responsibility of the individual to approach their lender and ask for that support, but that support is out there now. And there's pretty much, I can't see anyone not offering it. There's a lot of pressure for everyone to kind of do their bit to help us through what will be a difficult couple of months. On the other side of it, as a landlord or even as a commercial property owner, a lot of the relief is sort of down to the source. So in terms of business lending, there's now a government-backed unsecured loan scheme that small businesses can tap into through their banks. So what that means is that the bank can offer a loan to that business without any security. So effectively, it's a loan that's only secured by a government guarantee. That's quite powerful. It's going to be about execution. The banks are really going to need to jump on that and deliver it quickly because people need money now. But ultimately, it seems a sensible strategy to me. So the strategy isn't about propping up the landlord's mortgage because their rent's not being paid. It's about making sure the business can afford to pay the rent in the first place, and therefore the landlord shouldn't need any support. That seems to be the strategy. And they've been a little bit quiet on renters, but I would expect the strategy around renters to be the same. I don't think they'll focus on the landlord's mortgages themselves. I think they'll focus on the renter's ability to pay the mortgage first.
Okay, I think that's an important distinction. It does leave a group in the middle, which is people who own their own property but also have buy-to-let properties. Now, do you reckon that the private renters in there, because I can't see anything in the packages which explicitly help people in that position? I don't know how the lenders are behaving. So, for example, the likes of Paragon and, if you can give me a bit of an update as to how you think they're going to be reacting to that, because these are actually strictly not residential mortgages, as you know, they're commercial, semi-commercial, and if there's a little bit of a difference in the way the lenders are acting there.
Yeah, so that part of the market has been relatively quiet so far in terms of lender activity, but also in terms of government announcements. But I think by the time we get to the event on the 26th, there'll be a lot more information out there because this is a situation that is moving rapidly day by day. It's not in the bank's interest for landlords to end up in a position where they're defaulting on loans because tenants can't afford rental payments. So whilst there's not a solution out there yet that we can talk about, I'm hoping there will be by the 26th, but I'm pretty confident that it's not really in anyone's interest to allow the landlord community to start slipping into mortgage arrears. I think there will be some measure of support where it's needed. And we also need to bear in mind that as horrific as this kind of health and economic crisis is in the short term, not everyone's going to lose their job. Not everyone's going to be able to not afford their rent. For the majority of people, will keep their jobs and will be paid. It's about directing the support to those that need it the most.
Absolutely. Now, Daryl, that's really, really useful information. I think what you said there about actually looking at the scale, it's almost 80-20. Majority of people will be in great health and majority of people will still get back to work. Having said that, which is nice to say when we're looking at overall figures, but people aren't just a big homogenous group. These consist of individuals. So it's important that we also recognize that there are individual concerns, and because that is exactly how this whole thing works. Now, as far as the outlook goes, now this is where I'm going to ask for a bit of a crystal ball. The underlying fundamentals of the market, as you said, are good. They're solid. They're still the same. That hasn't changed. Where do you see the demand side recovering this year? Now, Daryl, I know you don't have any medical expertise, but just based on looking at how long the shocks last for, do you see this going on until 2022? Do you see a recovery in Q2 2021, assuming we get out of this towards the beginning of the summer or at the beginning of the autumn? So, Daryl?
Yeah, so my hope is that we start to see recovery as early as the end of this year. That's my hope. So I think much of it depends on the social distancing policy. That's the thing that does the most economic damage at the moment. So it feels to me as though the government's main strategy is to kind of spread the virus out so that they can cope with those that need critical care, so that not everyone gets it at once. So ultimately the same amount of people get it in the end, but they just get it over a longer period of time. So none of us know what that period of time will look like or how successful or not successful that strategy will be. But I think it all comes down, there will be a point where kind of critical mass is reached and a lot of people have had the disease and a lot of people have recovered from the disease. And at that point, it should be safe to start interacting again, getting back out into the restaurants, into the bars, into the cafes, propping up those local businesses and also getting people back into work and getting paid again. I really hope that time starts to kind of creep around by the summer when the warmer months come in. There's some talk about the virus not doing so well in the warm weather, which would be great for us. And I hope that we can kind of get back out and get back to normal. But it all hinges on that for me. As soon as the social distancing policy ends, we can kind of get back out there, we can work, we can earn money, we can spend money. And at that point, things will start to recover.
Fantastic. So just before I bring Brendan back in, and I just want you to have this opportunity to share exactly what you're doing as LendWell to support your current clients and what you'll be offering, obviously taking in your learnings through the last economic cycle and what people can know to rely on you for.
Yeah, so I think now it's about being flexible. So there's a lot of the stuff we do is project-based lending. So it's refurbishments, conversions, small developments. And the deals that we've got in the pipeline at the moment where people are still wanting to go ahead and largely they're completing, they'll carry on. I think where we can help is not so much today on those loans, it's what happens in a few months' time, because inevitably there are going to be some delays. You might not be able to get the builders on site so quickly. You might be held up here, there and the other. We totally get that. So we'll be working with clients to make sure that they've got a bit of extra time where they need it. I think if you're looking to do new deals now, the key really is just kind of understanding that people are going to be a bit cautious about what loan to value they want to go to right now. So if you're still committed and you find a fantastic opportunity, there is still liquidity out there to seize that opportunity, and we are still writing new loans. We've had to close the office, so the whole team is now working from home, but we only set up last year, so we're quite a modern business anyway. We've already got quite a lot of tech solutions, so for us, working from home doesn't impact on the level of service that we can deliver, so we're cool with that. And if what comes to pass is that actually investor and developer demand dies down and people decide that now is not the right time to jump into a new deal, then kind of my plan for the next couple of months really is to make the most of the time by forging some new relationships online, video meetings like this one, get to know some developers, get to know some investors. And what most people find frustrating when they come to get finance is that there's loads of paperwork you've got to do. Some of that paperwork's about the deal, but actually a lot of that paperwork is just about you, your portfolio, your background, your business model, your strategy, all that kind of stuff. There's no reason we can't do that work now. So I'm going to dedicate time with our clients, making sure that we've got really great profiles built up on them, so that when this market starts to recover and when deal activity comes back, they're in the position to borrow money in the most pain-free way possible and spend their time focused on finding deals, opportunities as they emerge, and spend less time doing paperwork. Now's probably quite a good time to get the paperwork done, to be honest.
Okay, that's fantastic. And comprehensive.
Thank you.
So, Brendan,
all I was going to say was, look, I look forward to seeing you on the 26th, as they join myself, join Aaron, Please, please, please do submit your questions in advance. The reason why I ask you to do that, it gives my panelists a bit of a heads up, gives them a chance to be prepared as well. So preparation is key. Yes, you can ask questions on the night as well, but if you have questions in advance, that's always useful because I can share it with Daryl, one of my panelists, Rod Turner, Julia Wetherall, and David Lawrenson. So really delighted to have that panel on the 26th. I know I'm going to get the support from Ronald Fletcher Baker. They said, look, we're keen to support you. We're going to have both partners, Rudy Ramdashan and David Burns, on hand as well at that live meet. When I say live, it's online. That's the key thing to add. Please do not come to the London Bridge Hotel. You can, but there won't be anyone in the hotel apart from the hotel guests, and so forth. So it is up to you where you want to listen. The joy of online, I prefer physical, but the joy of online is you can use Zoom on your phone. You don't necessarily need to use a laptop. So that's the joy. It's not a sales pitch for Zoom either. Even though it may sound like a bit of a sales pitch for Zoom. That's the only sales pitch you're going to get on the evening, the joys of using technology. So look, massive thanks to Daryl and to Aaron, and massive thanks to my sponsors who've stuck with me, said, yes, we accept that you're using online technology. In fact, some of them are quite advocates of online technology, such as James Pick of Connection. And of course, there's other crowdfunding, Crowd with Us, who use online as well. So, Aura Architecture, I'm sure, will be involved in one way or another on the evening. So just want to say massive thanks to Daryl, and thanks also because Daryl said he's committed to helping support me on my online journey over the next few months. I didn't think I would be online so much. So thank you, Aaron, for your time today, and also on Thursday, the 26th of March. Thank you.